Hey guys, how's it going? It's Andy from MagooInvesting. Today I'm going to be talking about probably my most talked about stock overall. Today we're going to be talking about General Electric stock, ticker symbol GE, because I've seen some things recently, especially on the charts, that make me feel pretty confident that the stock is going to have a major breakout. That could be to the upside, that could be to the downside. I'm going to break down today's video into three major parts with timestamps in the description below in case you want to skip around. The first part, I'm going to be talking about some recent news. The first one is going to be the recent stock split where it went 1-8. This was something that I was very against, and is probably the only time that I voted against the recommendation of the board. Anytime that there's a vote based off of a stock, you have the opportunity to vote yes or no, and the board gives a recommendation for how they feel would be the most beneficial for the company. And this is one of the first times that I voted against it. So we're going to talk about why they did it, the market reaction, and the resulting margin call that actually got as a result of that. Number two, we're going to talk about the most recent earnings report for quarter two. We're going to talk about some of the major numbers that came out there and kind of what I'm watching from that report. This is not the biggest earnings report in the world, but there are some very positive things that I wanted to discuss. And then number three, I'm going to talk about my overall thoughts on the company, because for probably the past couple months, GE has been relatively flat. In the past, it was holding around $13, and after a 1-8 stock split, that was around $104. And as of right now, the stock is sitting around $100, and it has not had a lot of movement really in the past couple months. So I'm going to talk about what I see on the charts, talk about some patterns there that makes me feel pretty confident that the stock is going to move pretty aggressively to the upside or the downside, and talk about what I'm going to do in either scenario. Obviously, I have to say this is not financial advice, and let's get right into it. So the probably biggest news, and probably the thing I was most upset about when I first heard it, was the stock split where they went 1-8. For the most part, does not affect many investors, with 2021 being kind of the most successful year that it's ever been for newer investors specifically. The price doesn't really affect how companies are traded anymore. You have some companies like Berkshire, I believe it's A, that's trading for like $200,000, makes it a little difficult, but for the most part on a lot of major brokers, you can buy fractional shares, meaning instead of having to buy like a full share of something like an Amazon, which will cost thousands of dollars, you can buy a fractional share based off of a dollar amount, and that's available on companies and platforms like Robinhood, Public, and some of the major brokers. But one of the areas that it does really affect has to do with option prices, because when you sell or buy an option, you are locking in a price for a lot of 100 shares. And so for someone like myself that has been very consistently selling options and running the wheel strategy, which is a strategy that I think is the most reliable for someone like me, this does not allow me to use that strategy anymore, because I do not have the buying power. I have the buying power. I don't want my whole portfolio to be locked up in like $10,000 worth of GE shares, because you need to be able to buy 100 shares of the stock at $100, $10,000. So that was kind of a negative thing for me. I wasn't too happy about it, but the reasoning behind why they did it is that they wanted to have their company viewed in a similar light to a lot of the other industrial companies out there. The problem with the major fall in stock price is that the number of outstanding shares has stayed the same, even though they sold off a pretty large amount of their overall businesses. And I think this is actually a really positive thing, and we'll talk about that with the earnings report. But when you have a company that is trading for a lower price, it is usually not thought of as highly as something that is traded at a higher price. And so what they wanted to do is they wanted to get rid of 80%, or I guess 7 out of 8 of the outstanding shares. They went from like 8 billion outstanding shares to 1 billion. And this puts them in a price range that's similar to some of the companies. I remember they talked about stuff like, I think it was Home Depot and Lowe's as being similar companies that they wanted to have priced. And so not a huge thing. It did have some restructuring based off of the stock split. I ended up getting a margin call from it, which is really interesting and was kind of unexpected. So during the process of kind of changing the price of the stock, I have a leap, which is a contract that I bought for a long expiring contract. So it's going to be expiring in January of this upcoming year. And based off the price of that and how much I paid and the changing of how many shares I owned, I ended up getting a margin call, which was settled the next day. But it was definitely weird getting an email saying that you've dipped into your margin buying power on my retirement account. So not something I was really expecting. Overall, if the company thinks this is going to be a positive trend and help them kind of keep pace with a lot of the other industrial companies out there, I'm totally fine with it. Obviously, I would love to be able to sell options on it, but in the future, hopefully that will be the case. But right now, I'm just going to be a long-term shareholder. Let's talk about the most recent earnings report, because there were some interesting things in there. The stock didn't move super violently based off of the news, but I do see some really positive things that I wanted to talk about. One of the things that really caught my attention is that they mentioned some warnings on inflation pressure. Inflation has been kind of a buzzword or a term that's been talked about a lot recently, especially with the Federal Reserve kind of holding the pattern that they've been going for the past year and a half of the pandemic. And so the thought is that when you have interest rates so low, eventually inflation is going to spike. And so that was something that GE warned about maybe affecting them into the future. Obviously, we really haven't seen a lot of inflation problems yet, but they do mention that as a possible hindrance to the company in the future. But looking at their earnings report overall, the things that really jumped out to me is that they've done very well at paying off their long-term debt. GE, if you've really had one thing that you could talk about as a bad talking point for GE, it's been their long-term debt, especially with their pension program. And so one of the things that they've been doing recently is that they've been selling off a lot of their arms of their business that weren't doing super well, and they're selling them off for cash. You had the airline leasing company that they sold off at the beginning of this year that allowed them to pay off a lot of this long-term debt. And when we look at their long-term debt that they've been able to pay off, in the fiscal year of 2019, they were able to pay off $16 billion. And this most recent quarter, they're up to 53, and they're hoping by the end of their fiscal 2021 year to have paid off around $70 billion. They still have ample cash, as they mentioned in their earnings report, of around $22 billion, which gives them plenty of credit and the ability to weather, just kind of the normal things that you'd expect for operating a business. So there's definitely not anything to worry about there in my mind. I do like them being able to pay off as much debt as possible, because that's been one of the big red flags about the company for the last couple years. And when we look at each of the segments, I see a lot of positives overall. You see revenue growth in aviation year over year. You see healthcare, renewable energy, all up 10 and 9% year over year. So you're definitely getting a boost based off of the pandemic. Aviation is still not exactly to where you would hope it would be, which is one of the main driving forces in my bull case for GE, is that as aviation starts to come back fully, GE will be in a really good spot to take advantage of that. And obviously renewables is probably one of the most exciting things about the GE business, and seeing just reliable growth makes me feel very good about the company going forward. So when I look at this most recent earnings report, there aren't a lot of things that really stick out to me as being, something that would result in someone either buying additional shares or selling the shares that they owned. I think this is exactly what you'd want to see from a company. They're seeing steps in the right direction for paying off their debt. You're seeing growth in all of their segments of their business, and they've pretty much gotten to the point where they've sold off enough arms of their business that were not doing well to pay off a lot of the long-term debt that they've kind of been holding for the past 5-10 years, especially with the pension problems. So when I look at all this, everything looks good. Nothing really stuck out to me as being an alarm flag that should be going off. And let's talk about why I think the stock is going to be going up or down significantly in the upcoming weeks and months. I mentioned to have this video come out at the end of last week, because when I was looking at the charts, one of the things that I really look at has to do with the recent stock movement with the price. And this is how I usually decide when to buy in or sell. GE is not something I'm going to be selling for a long time. I'm very confident in the long-term outlook of the company. But when you look at the stock split, in the past, around the $13 mark before the stock split was an area of interest. When you go 1 to 8, 8 times 13 is $104. As of right now, the stock is sitting just below that at around $100, but when I was doing the research for this video, it was sitting right at the $104 mark. Looking at the last couple months, this is back from July, you get a really interesting trend of the company not being able to post higher highs, but also, so it's been relatively flat on the upside, no new highs, but you're having higher lows. And so you get a kind of a convergence onto the support and resistance that I talked about around the $104 mark. And this is a pattern called an ascending triangle. And with an ascending triangle, you don't have it as a default bullish or bearish trend. What you're really looking for is a breakout to the up or downside, as it's kind of consolidating around one level, like the $104 mark. At the end of last week, I had a really tough week at work, so I didn't actually have enough energy to put out these videos. But on the 14th, which was, what day of the week was that? Tuesday of last week, you have a major red candle to the downside that bounces off the 200-day moving average. And so this could be considered a rather large breakout to the downside. When you look at it, there are some interesting zones to watch, especially down to like the $83 mark, that if it does fall further, that's where I'm going to be watching. And so it's going to be interesting to watch in the upcoming week to see if this was a significant breakout or we're just going to see kind of a fake out. With these trends, Obviously, it's not set in stone that it broke out to the downside. It's going to continue, but the trend is your friend, and a breakout to the downside of an ascending triangle usually means that you're going to have bearish movement for the upcoming future. GE is my largest position by far. If it continues to fall, I will be adding to it, especially if it gets down to that like $82, $83 mark, because I think that's solid resistance in the past, and now it is support. So that's where I'm going to be watching. For the past couple months, GE has not been the most exciting stock in the world. There are some interesting things. You could have a death cross coming up soon where the 50 moves over the 200-day moving average and is usually considered a bearish trend. But we're going to have to wait to see what happens there. With the recent move to the downside, it's going to accelerate that lowering of the 50-day moving average, and it will take a long time for the 200 to catch up. So as of right now, I kind of want to summarize my thoughts on GE because I have not talked about the company in a while. All of my bull cases are still intact. I'm seeing recovery in aviation. I'm seeing pretty solid movement. We have not had a new high in a long time, but the company believes that the 1-to-8 stock split was in the best interest of the company, and I do believe that going forward. My position is down overall. I'm not worried about it at all. This is a company that I hope to hold for the long term. I'm just looking at the charts going back to, let's see, when is this? Back in 2016, where it had highs of $260. We're at $100. If we're going to make it back up to that level, we still have a long way to go. I'm still pretty confident in the trajectory of the company, especially with paying off their long-term debt. You do have the interesting part of the potential break into the downside off of that ascending triangle. And it's just going to be something to watch going forward. It has not been the most exciting thing in the world, but I think that's kind of a positive thing. When you have a lot of volatility in the overall market, it's nice to be buying into stocks that are relatively calm overall, and you want slow and reliable growth, especially for a retirement account, which is where GE is mainly going to be holding in my portfolio. So let me know what you thought about the recent news in the past couple of months with the reverse stock split of a 1-to-8, which has boosted the stock price up artificially to over $100. And let me know what you thought about the recent earnings report, if you think the trajectory with aviation recovery and the renewable energy is enough for you to consider buying or holding onto your current position. Thanks for watching. I appreciate all support, and I will see you in the next video.